Well, hi there. Welcome back to my YouTube channel, Kites Swift Moves Trading Academy. And with this video, we're going to jump into breaking down the candle that you see in a candlestick chart. And I apologize for the background noise. Family's kind of wound up. Anyhow, candlesticks are one of the most powerful and visually intuitive tools in technical analysis. There's a lot of information that's being conveyed when you look at that one little candlestick. And if you understand one candle, you've already on your way to reading market psychology in real time. Can you guys be quiet? Thank you. The anatomy of a single candle. A candlestick represents a price movement over a specific time period, 1 minute or 5 minutes, daily, etc. And when you start grasping that, what you're going to start realizing is you're really reading the story of the market, of what's going on in the market. So each candle does tell that story, and there's a battle that's going on. Doesn't seem like it probably, but there's a battle that's going on between the buyers and the sellers, and it just depends on who's winning out at that time. So there's four key data points when you look at a candle. And each one is built from these four uh, prices. Really, you've got the open, where the price started for that candle, and this could be it. Just the time frame doesn't matter. The candle's still the same as far as how it's created. So you got the open, you got the high, you got the low, and then where it closes, and those numbers matter. So the virtual structure candlestick has two main parts. You got the body of the candle, and that's this thick section in the middle here where you see it colored. Usually it's colored. Sometimes it can be hollow, um, and it can be different colors to represent different things. Okay. Um, and and it's a visual representation between the open and the close. The wicks or shadows, some people call them. That's those thin lines that you see sometimes on the top and the bottom, and sometimes on both. What this represents, at least this is what I'm told, is that the thick part of that body is where somebody placed an order and that order got fulfilled. That kind of makes sense when you think about it. But sometimes orders are placed and they don't get filled. And why don't they get filled? Well, they don't get filled because that somebody disagrees with the price that a person has placed an order at for that time frame. So, but that tells you a lot of information, doesn't it? If you really think about it, and depending on the shape, the size of that candle, and how long, or whether there's any wick at all, or how tall that wick is, or if it's on both ends or one end, it's all telling a story. So, a visual I try to give people when we talk about bullish versus bearish. I don't really know where these terms came from, but it's what they use in the marketplace. So if you can picture a bull with its head down, it's got its horns out there, and it's picking somebody up and throwing them, right? It's throwing up. The bull is picking that whatever it's grabbing with those horns, and it's throwing it up into the air. So that represents when you have a bullish candle or a bullish market, it means the price is going up. With a bear, you can picture a bear standing up on its hind legs and its claws are out and it's clawing down towards the ground. So if someone tells you that this candle is bearish or the market is bearish, it means that they believe that the price of it is going down. And so now standard configuration bullish is represented as a green candle and bearish is represented as a red candle. But the reality with these charting programs is you can customize that. For example, right now, the one I'm using, we're using black and purple. So, you got that going on as far as just different colors. It doesn't matter as long as you understand what it means. If it's easier for you to see it, well, then change it to whatever color you want. Um, but anyhow, so that's what you're, that's what you have when you have that type of a candle. So if it's bullish, the close is higher than the open. That makes sense because the price is going up, right? It's often green or sometimes white. Just can be whatever color you want to make it. But it tells you the buyers were in control. In other words, because there is a constant battle within the market itself for each of these type of commodities or securities. There's a battle going on, and so if that price is going up, it means the buyers are in control and they're winning. All right, so bearish. Remember we talked about what's the bearish mean? And well, it means the price is coming down. So it's oftentimes represented as a red candle, but it can be red or it can be black. Again, whatever color you want to make it. But the close of that candle is lower than the open. And again, that makes sense. If the price is going down, it's going to have to close lower than it started, or it's not doing what you think it was doing. And what that's telling you is that the sellers were in control, or the sellers were winning that particular battle. Okay. So, what a candle really means, well, we've kind of already been talking about it. If you got a long green body, it means there's strong buying pressure. The momentum is up. If you got a long red body, it means there's strong selling pressure and the momentum's down. A long upper wick, price was pushed up but rejected. Again, it was somebody placed an order for that, but it didn't get picked up or accepted. Same thing with a wick that's going low. The price was pushed down but rejected. Small body, that's indecision. Sometimes that's referred to depending on how small that body is. If it's just like if it basically looks like a cross with the middle of the cross more in the center of the body than on the top, like a traditional cross that we know of. That's called a doji, and usually that doji is very representative of that the trend is about to shift. And that's a really strong piece of information for you. Doesn't look like much, but you go back and look at the charts and follow back and look at those dojis, and you'll see that oftentimes the market did a turnaround in either direction. So a lot of good information is being conveyed. So the wicks, what a candle really means, going on part two of this. Uh, the body of it is showing you the high and the low of the period, and then the wick is showing the lowest and the highest with the wick. Whether if it's bullish or bearish, it'll change the color of it and where it opens and where it closes. We already kind of talked about this, but this just gives you a visual representation of it. And we've already kind of talked about this, so you can look this over yourself. Uh, now, a hammer is an interesting candle because it also is signifying a reversal. So if you have say, for example, a downtrend, and at the bottom of the V of that down, right, you see a kind of a stout body with a really tall wick. They call that a hammer. Kind of looks like an old style hammer. And what that is telling you is that it's getting ready to turn around and reverse the other direction. Now, if it's the other way around, same thing. If that you have the trend is going up, and at the top of that peak, if you would, there's a stout body with a real long wick underneath, and then that would be another hammer, and you would signify a reversal. So anyhow, time frames. Now, we talked about this earlier when I was going over the various aspects of the functionality within a chart, and the time frame of that candle matters. Um, if I'm looking at a daily candle or a 4 hour candle, I'm getting a lot different picture of what's going on with that market for that security than I do if I'm looking at the 1 minute. The 1 minute is, I mean, it's like I'm down there on the floor with them and watching the trading going on. And depending on what I'm trying to accomplish, those time frames can make a big difference on the story that I'm reading or seeing. Right now, this is really important here. A single candle alone doesn't make a trade, but it gives clues. Right, the momentum, whether if it's strong or weak, the rejection, showing you the fail. So one candle gives you a lot of information, but you shouldn't be basing a trade off of one candle. That'd be kind of really insane when you boil it down. So what you want to do, the smart traders combine things, and this is what I was getting at earlier when I was teaching you about the indicators and the strategies, is that you want to look at the candle itself, what's going on, but look at the trend. You want to look at the volume because that's giving you an indication of what's going on with the market. The key levels, that support and resistance, your support and your demand zones, if you would, and then like your EMA, those moving averages. When you look at all that information together, you start getting a really good picture of what's going on in the market, which will help you predict what that price action is going to do, which means then you can trade around that expectation. And oftentimes you should be right if you've done your homework. So, beginning rules, again, you don't trade on one candle, you read it in context. A candle is just one sentence. You need the whole paragraph, or you need the setup and the trend to start putting together the story of what's going on with that market. Quick mental checklist. Use this while trading. When the candle forms, ask, who won this? Did the buyers, the sellers? Was there a rejection or not? Sometimes you'll have a candle body, and there's no wicks on either end. And what that tells you is whatever color that candle is, that's who's winning. But also the fact that there's no wicks on either end tells you that it's very strong movement in that direction of whichever way that candle is going. And that's a good place if you're trading in on it and you're already on it. Uh, and also, where is this candle happening? Is it at the key levels, the highs or the lows, or is it just in the middle randomly somewhere? That all tells a different story. And as you start staying with a small handful of these securities where you get to where you really know them, you'll start reading that story and you'll start understanding that story, and it'll help you with your trading. So, anyhow, that's it for candles as far as giving you a little basic of the rundown of a candle. And so now, as you start looking at the chart, think about it. In the last several videos, you've learned what all you can do with the chart as far as different timings and time frames. You've learned that you got different types of charts you can have. And now you're starting to understand what each of those candles is representing to you. And that's information that's all put together in a picture type format, an image format, but it's a lot of information being conveyed to you, and you don't have to know the exact numbers behind that data uh, for the most part, but you just need to see that it's happening and see the impact that it's having on the market. So anyhow, well, I guess we'll talk more. I think I'm going to do the next video is I'm going to talk a little bit more about my credentials, because I realized back in the early video I kind of talked about the first class I took, but I didn't talk about anything else. So I think that'll be the next subject. Take care. Bye.